Salam, TB. Welcome back to ONeWealthOutlook's market update for the first week of December 2021. My name is Sagar Kusuma, and today I'm here to give you our views and analysis on global and domestic markets to help you build the best investing strategies. Now today we have several market-shaking events to unpack, namely the new Omicron variant of concern and Tuesday's testimony by Chairman Jerome Powell of the US Fed. We'll consider how this may impact Indonesia in the near and long term. So let's get started. The world is currently holding its breath, waiting for more data from vaccine manufacturers and geneticists on whether or not the WHO's new variant of concern, Omicron, is more infectious, has different symptoms, or requires new type of vaccines. Now, it was identified on the 25th of November in South Africa and has already been detected in 21 countries. In the 4 trading days since its discovery, the Omicron variant has brought back volatility and anxiety to global markets. The CBOE Volatility Index, nicknamed the Fear Index, was closed at its highest levels since February 25th, last Black Friday. Now, what the COVID situation is globally and where we're at is that there's been a growing fourth wave in Europe that's prompted new restrictions in many countries and even lockdowns in countries like Austria. The European region has accounted for more than half of the world's COVID deaths in November, and globally, travel lockdowns have been reimposed, largely restricting travel from South African countries, but some have taken the extreme measure of banning all travel, such as Israel, Morocco, and Japan. Although more than 7.7 billion COVID vaccines have been administered worldwide, the virus continues to impede parts of the global economic recovery, as some major economies such as China have attempted to limit the spread of the virus through stricter lockdowns and zero COVID measures. Now, this has caused labor shortages and supply chain bottlenecks that further exacerbate the current supply chain crisis and further give rise to more inflation fears. On Tuesday, Jerome Powell reluctantly admitted that it is time to retire the notion that inflation is transitory, as headline inflation has run well above 2% for long enough in the United States, the latest reading currently at 6.2, a 30-year high. Now, during the same session, Chair Powell also stated that the Fed is considering an acceleration of tapering, which signals that rate hikes may come earlier than expected. Now, as we noted in the past few weeks, this hawkish tilt carries potential downside risk for emerging markets and risk assets. Now, this appeared to have an immediate risk-off impact on U.S. equity markets, as the S&P 500 fell 1.9%, the Dow Jones 1.86%, and the Nasdaq was down 1.55% on Tuesday. All things being equal, the impact of both Jay Powell's more hawkish comments and uncertainty over Omicron is an overall risk-off position adjustment. It may be the case that the rest of the year we experience further volatility. What's for sure is that in the short term, there is a risk-off tone that has impacted reopening bets in assets such as oil and equities related to travel and airlines, as well as emerging market currencies. The MSCI EM Currency Index has gone below its 200-day moving average for the first time in 2 months, and cryptocurrencies also saw a significant drawdown during American Thanksgiving, Black Friday. And the impact is already evident in Indonesia. There's been this element of taking profit from the year, starting the week of American Thanksgiving. Now, the continued selling off of Indonesian sovereign bonds by foreign investors, as well as equities. We find the JCI falling off its recent all-time high of 6,745 to hover at its 50-day moving average mark. The good news for Indonesia is that core inflation for the Asian region as a whole remains muted, especially compared to the United States, Europe, and Latin America. Although headline inflation in Indonesia has been slowly increasing since June, it remains at 1.7% as of October. Now, that's far below Bank of Indonesia's 2 to 4% target. The latest November CPI readings released Wednesday showed only a very slight uptick of 0.5% to 1.75% inflation. As we are nearing the year's end, we will also be soon releasing our full Global Treasury Research 2022 Outlook. Now, this covers OCBC's specialized research areas, including Singapore, China, Hong Kong, Taiwan, Malaysia, of course Indonesia, and a number of other issued topics. Our Indonesian outlook will be mapping out our roar back to life in terms of exports and trade growth after manufacturing and private consumption took a hit during the pandemic in Q2. We will also be showing and discussing the potential headwinds and risks that investors should take note of in 2022, including how the government may attempt to rein in the budget deficit below 3% GDP. This year's Outlook will also include a special domestic property deep dive, focusing on the prospects and potential for Indonesian property and its recovery since the pandemic. Now, from all of us here at OCBC and SB, that is all for today. This has been the December One Wealth Outlook weekly update. To follow more of our market updates or access our weekly market journal, click the following link, as well as follow us by clicking the subscribe button below. I'm Sagar Kasuma, wishing you a lovely weekend. Salam. Taya Tebe.